Let me tell you something that I've told you before, back in 2022 when we were crashing, and it saved many of you guys. It certainly saved me, and something that I was able to keep running with me to make the huge profit that I made on my Bitcoin position right here on Bybit. It is the principle that I used to make this 2100% profit. That is a 22 times gain on the capital that's left in my account. Absolutely fucking crazy. I'm going to tell you how I was actually able to pull this off right now. Same thing that I used for this Tron position. If you want to get access to these exchanges, they're giving you free money, which is absolutely amazing. All you've got to do is start trading on Bybit to get up to 30k free, or that free $500 position. And BingX, same deal, but there's no KYC. Brilliant alternative. Let me give you this beautiful nugget right here. So in these markets, when you start to lose areas, you must not visualize these areas as just, 64k down to 50k down to 42, because you're going to start to really freak yourself out. Those are big drops. They're big drops in dollars. They're big drops in percent. You're going to really screw up your game if you look at the market that way. What I was telling you guys back in 2022, and it's the same thing I'm going to tell you right now, is that if you manage to lose this $30,000 price level right here, for example, you are looking at no support between 30,000 and 20,000, right? And we know that 20,000 was support because this was the all-time high of the 2017 cycle. So you realistically know that you can't expect support until you come back down to this price level. Now, if you expect that we lose this price area and it's going to be a big $10,000 drop and that scares you, you're completely losing sight of the fact that there is no support on the way down. So you can't reasonably expect support to just fucking come out of nowhere, just magically appear. And that's why we don't need to worry about how big those drops are, because it's indeed the case in the opposite direction that as soon as you start to go above these levels, you also have nothing stopping you from going back up to the same areas of resistance, right? We lose this area and it's a straight ride down. But as soon as we get above this area, okay, we take a bit of a scenic route to get there, but it's damn near guaranteed that when you get back above it, you're going up to the next area on the chart. That's why we don't need to worry about these things in terms of, oh, that's a 10k drop, or oh, that's a $20,000 drop from 70k down to 50k. I know these are big drops, but you're in crypto, man. You signed up for this. Don't start crying when the volatility comes in exactly the way you want it. And I'm not saying you're crying at all, by the way, but that's not what we're trying to achieve here. What we're trying to achieve is an understanding that it doesn't matter how big the percentage drop or dollar drop is. We are only looking for levels. I need you to detach yourself from this concept of it's a 10k drop, 20k drop, 30% drop, whatever. Forget all of that. It's a new level. We're going down to a new level. I don't care if that level is 1% below where we are right now or 99% below where we are right now. The only thing I'm interested in is this a new level? Yes or no? If it's a new level, brilliant. When you start visualizing the market like this, instead of in terms of dollar drops, for example, you're going to put yourself in a very powerful position because you're going to be able to really see the market for what it is without clouding yourself with fuck, this is a really big drop, this is really scary. And you're going to start to be able to position yourself in really good ways to make money off really, really nice levels. I think that's really, really important. You're going to really see the market very differently. Take a shot every time I say really, and it is going to change your game. It is going to change your game, okay? You're never going to be worried about price action ever again because you know it's fine. You know that if you lose 42k, you're down to 30 on a macro level. It's just what you expect. That's the next support. But you also know that if you bounce above 30k, you're probably going back up to 42 because that's just the next level. So you're not going to see, it's going to be the jump from 1 to 2, from 2 to 3, from 3 to 4. It's not the jump from 3 to 10 or 10 to 50. It's just, it's increments in terms of levels. There's actually a really interesting way to look at these charts with, I forgot what it's called. It's there's different types of candles you can take, and many of you don't even know what this is, but I'll just briefly tell you. It might be called velocity candles or something. Let me see if I can Google it real quick and show you guys. And it's basically where you've got candles that are based on price data. Volume data instead of time, right? So with a normal candle, what you've got is, and this is hard to describe without showing it to you, but In a normal candle, what you've got is every like hour, for example, you print a new candle. With velocity style candles, it's every time you trade 500 million contracts, you print a new candle, which means that one candle could take 1 month to print, or it could take 1 second to print, and it depends on how much volume is being traded. And that's actually a much, much better way to view the market in terms of where interesting price levels are. And I can't pull it up for you on this one right now. And it's not something I talk about on YouTube because it's just going to go over everyone's head, and it's honestly very confusing if you have never looked at it before. And I don't want this channel to be that confusing, and you don't need to either. You don't need to do stuff like that. But that's a really important way that you can, interesting way that you can actually reframe the way you view this market, because you're no longer going to view it in terms of time. You're going to view it in terms of action. Like, just from hearing me talk about this, that this is objectively a better way to view the market. And I'm not telling you guys to do it. Maybe I've spurred one or two of you guys on to, research it, and maybe this changes your life. Maybe it doesn't, but that's not the point. You don't need it. I don't need it. I don't even use it. But it does show you that there are other ways to view the market than just, damn, it's a 20K drop. This will serve you really well in the long term, ladies and gents. This will completely clean up your game. This will completely change your game, and you will be you will be the guy with balls of steel, with diamond hands, as the big drops or big pumps come in. You're going to be completely fine. Honestly, your demeanor is going to be like mine. Like you won't, people, I'd have like my girl with me or whatever, or whoever's with me, a friend, and I may have lost, a bunch of money in a trade, or I may have made a bunch of money in a trade, and they would never know. Like, they'd only find out when I tell them. They'd never be able to tell from my attitude if I've lost a lot of money or if I've made a lot of money. They just never know. Like, I don't show it on my face. And it's not that I don't show it on my face because I'm trying to be like a macho man and hide it. Like, no, I literally just am indifferent to it. And that's where you need to get to as a trader. And by the way, it's been 7 years for me. Like, this might take you some time. But that's where you need to get to as a trader, because that's when you start to really detach yourself from the game and you can start to make really, really good decisions. So I think that's very important. We start coming down to really interesting price levels, and if you've been kind of clouding your judgment because you've been worried about it on the way down, you're going to really kind of kick yourself for it, and that's not going to be pleasant.